What's up, everybody? Welcome to the session here, folks. My name is Rodrigo. I'm going to be here with you today and with Matt Maley, Chief Market Strategist at Miller Tabak, lead trader at the Stock Picks Inner Circle chat room. If you don't know what that is, pay attention. You're going to want to be part of it. Matt Maley has been in Wall Street for about 40 years at Merrill Lynch, Salomon Brothers. He'll tell you all about it. More importantly, right now, he just got off the session that he has with the members. It's 9 to 5 live trading, and Matt's basically going to show us how he's able to profit from the volatility. It's not just sitting on the sidelines. We're talking about actively, proactively engaging the market. So I believe we do have Mr. Matt Maley here. Let's go ahead and give him a proper welcome, folks. Let's go.
What's going on, Rodrigo?
Hey, Mr. Matt, how's everything going?
You know, it's great. I for the first time, and I don't know how long, I wore a suit today, and just took off the tie, so it was nice. I actually made a presentation to some college kids today, which was actually a lot of fun. But still stayed very close to the markets and stayed in the chat room. But you know, this is the times should just keep on getting more interesting. You know, it's funny, we having these conversations, Rodrigo, and it seems like every week or every time we do it, I say, you know, geez, things are going to continue to be volatile. And they go, you know, he's just saying that. And it's like, well,
right.
It hasn't changed, and it's going to stay that way for a while.
Yeah, and I know we have a lot to cover, Bank of England, a lot of stuff. You're the top guy to talk about all this stuff. Before we do get into all that, because it's packed, a lot of the members here, a lot of the new people here, they more or less want to know, hey, how is Matt doing this? So before we do start, Matt, with you know, you showing us your strategy, how you're able to weather the storm, give us a brief background here of your experience in Wall Street for those that are watching for the first time. In the meantime, while you do that, put a 1 in the chat if this is your first time here. Put a 2 in the chat if you've already been here before.
Well, great. Yeah. So just to give you a little bit of a background, I have you know, kind of a dual role. I have the chief market strategist at Miller Tabak, and I work with Benzinga as well with some stock picks reports, and also with this chat room that we've been doing now for, gosh, about a year now. And what it is, you know, a chat room where we're talking about the markets all day long, sharing ideas, talking about specific trades that have worked extremely well since we got started this year. And, you know, in a year where the markets killed a lot of people, we've made some real good money. I mean, multiple hundred, we're up several hundred, over 300%. But this is my background, again, as a strategist, is different than most strategists. You see a lot of people on the network news, the financial news networks, CNBC, Bloomberg TV, Bloomberg Radio, Yahoo Financial, TD Ameritrade Network, etc. And I'm on all those. In fact, I was on earlier this week on CNBC and several times last week. In fact, they called me late on Friday because they wanted to get me to go in, just literally said, can you go on in 5 minutes to talk about it, because the market was getting hit. And they wanted my viewpoint. And the reason is because, again, I'm not like a lot of these strategists who are kind of paid to be bullish. That's their job. Not all, not all of them do that, thankfully. But my background is not that of a research analyst. It's not that of an economist. I was a trader for 25 years on Wall Street. First 15 years at Solomon Brothers. For you younger people, never heard of Solomon, maybe, but it was the most important trading firm on Wall Street for 30 years, the last 30 years of the 20th century, in the 70s, 80s, and 90s. I was not there in the 70s, but I was there for 15 years in the 80s and 90s, and then moved to Merrill Lynch, which one of the more powerful trading desks, and certainly the biggest one as well. So 25 years, and in that I learned what the theoretical stuff you can throw out the window, and how it's really important to watch what's going on, to not what should happen over the next 6 months, 9 months, 3 or 4 days, but what will happen. And this theoretical stuff, it works out real well, but we learned very quickly in trading that we don't care about what's going to be 3 years from now. We care about what's going to be in the next few hours, in the next few days, in the next few months. Now, of course, we still care about those fundamental factors, and so I look at the fundamentals. They're very, very important because, geez, sometimes these short-term trades that go out for 2 weeks end up lasting for a couple of years, but certainly for several months. But I look at the fundamental factors, but I also look at the technicals, looking at the charts. That's vitally important in trading. Look at sentiment readings, and then, of course, positioning. All these different factors, you got to look beyond the fundamentals to really, in this market, to make money. And the whole idea for me is, again, combine all these different things, throw the theoretical crap out the window, and concentrate what's going to make us money. And in the trading in the chat room, and that's the thing too, is that when we do these trades, everybody has a long-term bucket, and should be anyway. I have that long-term bucket where they are looking 3, 5, 10 years, and if you're younger, looking for 30 years down the road. But you also, if you have the time, you have the inclination, you have the like I said, the desire, you can really enhance those trades, you can enhance those returns with active trading. And it's something that we've worked on very, very well. And like I said, we've had unbelievable success this year, and in a very volatile market, in a market where people have lost a lot of money. And beginning of the year, or at the end of last year, actually, and the beginning of this year, I was pounding the tables. People, raise cash, raise cash. This is going to be a bear. It's not just going to be a little correction. It's going to be a bear market. It's going to be no less than a deep correction, probably a bear market. And then as we moved early into the year, I was saying, no, it's going to be a bad bear market, and it's going to be a recession, et cetera. And again, if you actively trade that with that around, so we weren't buying the dips, we were selling the bounces, and in the options market has allowed us to really work well. And this, the last thing to mention is that as we've been doing this for decades, the only people who could really take advantage of down markets for the most part were the big hedge funds, who could, they could make big bets on the sell side. You could, first of all, shorting stock is a very hard thing to do. It's very dangerous also because you have to borrow stocks and things like that. But in today's market, we have the tools. It's not just the institutional traders that have the tools. We have weekly options on basically all the major stocks and all the mid cap names as well. Smaller stocks, but there are some that's a little bit tougher. But we do have it on, like, for instance, the small cap indexes like the Russell 2000. Very liquid options there. And again, they in the Russell 2000, just like the S&P and the Nasdaq, they have options that expire 3 times a week. We have ETFs. We have options on ETFs. We have group ETFs where we've made money on the XLE, trading on the XLE, which is the energy stock ETF. Options on the XLK and the SMH, which are technology ETFs. All sorts of different. So we can do things in the markets. We can do it in individual stocks. We've made money in Advanced Micro Devices, Tesla, Apple Computers, some, you name the stock, Amazon, some great stocks. You don't need to buy those penny stocks that you hope go up a million times. You can buy a very liquid stock. And if you get the right turning point using fundamental, technical, and other assets, other studies, you can make these big moves because we have the tools. We didn't have those before. And also we have inverse ETFs. And then we have leveraged ETFs. We've made quite a bit of money this year in the QQQ, the leveraged ETFs on the QQQ. So this is, again, kind of a unique place in the chat room where we, like I said, what's the whole idea? What we're trying to make money? I mean, one of the things I tend to hammer home at the end, but I want to do it at the beginning of this time. I mean, there's the cost to join to be a subscriber here, but the whole idea is to make sure that help you way more than cover the cost of the subscription, make money. And I'm telling you, this volatility is what we're going to have for right now is going to continue through next year. And you need to be able to trade. You can't trade alone. You need to be able to trade with other people. This is a group. It's not 10,000 people, 20,000 people on some huge chat room where you don't know who anybody is. Are the people just doing the pump and dump where they're talking up a stock that they've already bought so they can sell it to you at a higher price? That's not what we're about. You know what we do, or you know what I do on every trade. If I want to trade, I tell you exactly what the trade is and when to get in it, when to get out it. And get out of it, and then a lot of times we'll play around with it. We'll buy some and sell half of it after a nice profit, and then hold on to the other half and see if it can run further, etc. But when you're trading with not just me, other people, there's a lot of other people with great ideas. I mean, I was out today for several hours again doing this presentation to some college students, and boy, the chat room was still going wild, talking to each other. So there's a lot of money makers where that I'm not involved in. The ones where people ask me about it, there's a couple of them where people have asked me about it. I said it was a great idea. Also said I wasn't going to get involved, but you should go ahead and think if you want. And sure enough, they in one case, made 2,500, even 2,500%, and I missed out on the boat. But the ideas are out there all the time, and you get to feed off one another. When you have something that's a really good idea, and you ask me, hey, Matt, what do you think of this? And I'll come and say, you know something, I don't like this idea at all. And I'm going to be honest with you. I'm not here to yes you to death. I don't make any money, any more money
Right.
if you're churning your account. I just give you ideas and get you out. Always try to get you out of the losers quickly, because there are always going to be some losers. Let the winners ride, and make sure those winners are much bigger and run much longer than the losers. And working together, it works out really well.
Right, Matt. And do you mind sharing your screen here so that you can show the folks the actual trades, ticker symbols, everything? I'm showing them the chat room, which is basically where you're posting entries and exits. But I think it's better if we show them the actual trades.
Yeah, let me put this up here now.
Whoops. By the way, I took some of those SQQQ trades. I booked some profits today, and just want to say thank you, Matt. I've been following Matt here for about 2 years since I started up Benzinga, for you guys to know. I launched the chat room with Matt when it was just me and him. And I've been following his picks for like forever, basically. And the chat room is just amazing because it's another extension of really what Matt is able to do, not just from the analyst side, but also from the trading background. But let's go ahead and show the folks here, give them a taste of the chat room.
Right, let me go. I'm sorry, I was into the wrong thing here. Let's go here. Now, just to give you some of these charts and some of these, well, again, these is way back. This is back last year. Say 180% on NVIDIA, but let's what have you done for me lately? That's what we care about, right? And just to show you what how we look at things. Here we go. That was further out. Hold on. Oh, gosh, I'm sorry. I want to get you. Here we go. Oh, here's one. That's actually the one I missed. Am done. Okay, that's June. Whoa. I want to go get a little. Well, again, we have some for many months. I apologize. There's August. I just want to go ones we've been. Here we are. Sorry about that. And okay, here we are this week. Bang, bang. Okay, so this is just what we do. Here's boom. Here we go. Just this week, just last week. I'm sorry. Whenever we go in, we're trying to look for key turning points. There's so many people, they keep saying, I just want to get that middle road. I don't care about that. And that's fine. You get that 70% in the middle, you can do very well. And you can't, when you're trying to get those key turning points at the top or the bottom, you're not going to get the exact top. You're not going to get the exact bottom. But there are tools we can use to kind of grab some significant moves. And when you get into the options market that are so liquid, we can gather that. Now, recently we had been, I've been bearish on the stock market, but as we moved into early last week, The market was rallying. What's going to happen here? I was cautious on the market, but I said, this market's getting oversold on a near-term basis. We need to go in and buy some calls. So on last Monday, okay, at the end of the day, after the market already rallied some, we came in, bought some QQQ to October 7th, $280 calls. I wish I had held on to them for a lot longer, but we more than doubled our money by the next morning. Now look at this again. We give you the exact trade. What's the symbol? QQQ. That's the Nasdaq, the ETF for the Nasdaq 100. The strike price. Strike price. That's the expiration date. We bought it on October 3rd, but the expiration date was the 7th. The specific price, the specific strike price, and whether it's a put or a call. And so that was just something that we got just last week. Bang, bang, whoops. Okay, I just wanted to get. Okay, here we go. And then, well, again, I'm going to some of these in September. I'm kind of bouncing around here. I apologize. But so here's a TQQQ. I mean, as we saw what was going on in September, the market was really rough shape. It was getting hit. It bounced one day. And I said, okay, it stabilized for one day. But everybody was saying, okay, this is it. The bottom's in September, and everybody, let's say, it's too many people on the, it hadn't gone, everybody hadn't gotten so bearish yet. And I came in and said, no, look at the stabilization here. This is not the beginning of a rally. This is just a head fake. So we went in and bought the September TQQQ. So we wanted to leverage ourselves. I was really aggressive on this. So this is the 3-time leveraged ETF, and we bought puts. Okay, it's the September 16th $30 puts, and we bought them in the morning that day on the 12th, on the 13th. About 24 hours later, we sold them again. 200. Let me blow this up so you can see it better. Boom. Boom. 251% gain. Now I didn't. This was one where I got almost the exact bottom and almost the exact top. We didn't quite get it. But there are other times where again, here I keep going back to that UUP. I apologize. Here is something where we bought the TQQQ calls earlier in the day. This was not the same trade. This is 160%. Again, same thing. Market was getting oversold. We came in and said, hey, we can take advantage of this. It's getting towards the end of the day. Market's getting oversold. Let's go in and buy the September 9th calls. This was on the 8th. This is what we call a lottery ticket. It was right the day before the expiration. I said, this market's getting oversold. We can buy some here. 166%. We sold them the next morning right on the opening. We held them for about 15 minutes at the end of the day and about 3 minutes the next day and made money. The whole idea, of course, is making money. Not going to try to claim that every trade makes a zillion dollars. Well, here's another one we did in August. And again, it's not just individual stocks. It's not just in the QQQ or the S&P 500. This is the LABU. This is the biotech ETF on it's the leveraged ETF on the biotech index, the IBB biotech index. We came in here. Remember how the market was getting hit hard, the overall market was starting to rally, but the biotech stocks continued to stay down. And my point was that, hey, the fundamentals are turning better on the biotech stocks. The group is oversold. Instead of just buying the IBB calls, we're going to buy the LABU calls and lever ourselves up. Well, just look at this. We bought them at 3 o'clock one day. The next morning, afternoon, okay, these things were up over 800%. Okay, and again, exact trade. LABU, there's the symbol. August 5th, there's the strike price. $10 calls, boom. Now, if I had waited, a little bit longer, we could have bought them a little cheaper. And if I had waited a little bit longer, we could have sold them a little bit better price. If you're going to go home and worry yourself about after you made 857%, you shouldn't be doing this because you're going to drive yourself crazy. If you get the exact bottom or the exact top, you're going to be lucky. And if you get both the exact bottom and the exact top, it's going to be ridiculously lucky. So don't worry about that stuff. Here again, we did in July. My point on this is where I'm showing you that we do it on a consistent basis. And the TQQ calls here. Remember when the market was turning higher in the summer? We took advantage of this. Well, this one was a day trade. I don't do that much. There's plenty of day traders in there, and they're scalping trades all the time, and we talk about that many different times. A lot of my trades are more several days or several weeks, but here's one again, 133%. more than doubled our money in one day on the 15th. I'm sorry, on the 14th. See it down here, the July 14th, but the options expired the next day. Again, we made 133%. I thought to myself, okay, when you make 133%, you more than double your money in 3 hours. It's time to get out. This is not, it's one thing if you have a real good idea and everything's gonna change. This was just a nice trade. You made more than double our money. It's on the overall market. It's not on some new story that I think is gonna, change the world in the next couple of weeks. So we go ahead and make those things. We make it in several different markets. Here we are on the TLT, the calls for, this is the bond ETF, okay? We came in here on the July 8th. Okay, so it was the week before. Okay, it was a Friday, and we went out a full week. We went out a full week. Okay, we bought, even though it was on the 8th, we bought the TLT July 15th, $115 calls. Boom. Came in on Monday. We hold them the whole day. They were up nicely. Didn't take a profit. They opened the next day. My feeling was that they were so oversold based on my chart readings, and that we were getting so much relief in the bond market. Remember, over the summer, I knew it had further to go. It would become ridiculously oversold in June, and and that kind of creeped into July. And we bought these. And again, we came in and we bought them, sold them for a 284. It's almost 4 times your money. Okay, remember, 300% is really 4 times your money. 100% return is twice your money, right? Again, we bought. I didn't get the exact low on the 8th, and I didn't get the exact top on the 12th. But again, 280%, almost 3 times your money. Pat yourself on the back and move on. We even bought it in wheat, believe it or not. We get into the commodities trades. Remember, wheat had become, all these commodities had taken off in the first quarter. I said, then they sold off. They got just absolutely cracked in June and into July, but they came seriously oversold. And we really just locked into that. And we came in. Wheat, it's like, who wants to buy? I mean, 5 years ago, if you want to buy options on wheat, you had to go into the futures pits. Do you have a guy in Chicago who can go to the futures pits, a commodities broker? We don't need that anymore. We can get it into the ETFs. And we bought the WEAT, which is the ETF for wheat, the July 15th, $9 calls. Again, we held on them for 3 days, 254%. Okay, so it's not just in the stock market, and it's not just in the the bond market. Here's the talking about groups. Remember, I talked about the IBB earlier this year. Oh, let's just go here. Let's see if we can get it here. Okay. And the thing is, we can make money in both directions. Here was the XLE. I had been bullish on the. I was so early on the energy stocks. I came in October of 2020 and said, you got to buy the energy stocks. Everybody else was saying, no, fossil fuels, it's dead money. Don't even think about it. Well, sure enough, 3 or 4 months later, they all jumped in, the Morgan Stanleys and the Goldman Sachs of the world. The end of the year, they were bragging about how their call made these ETFs were up 50%. The ETFs were up 120% from where I came in. So we way more than outperformed those guys, again, who are looking for that 70%. We want the key turning points. And here we came in, but we want to be nimble. And at the end of May, just the opposite had taken place. Everybody loved the energy stocks. Everybody was in the energy stocks. It was way too crowded. I said, okay, people, I've been bullish on this group for 18 months. This is topped out. We're gonna hold on to our stocks on a long-term basis because we still like the individual stocks, but we're gonna hedge this and make some money on the downside if downside's coming. Sure enough, came in, bought the XLE, June 17th, $90 puts, okay? Bought these in early June. 4 days later, they were up 560%, and I sold half. I wish I'd sold all of it. When the thing came down, but it rallied back, we sold the other half up 470%. So you can see we made over 500% in 4 days, okay? But on both sides. And then, bang. A couple weeks later, we went back in on the bullish side. So we made on both sides. Whoops, boop, boop. Remember, we made here on the puts, betting that the market would go down. The XLE, the ETF for the energy stocks would go down. And a couple weeks later, we bet it go back up again. Sure enough, we bought this late in the day, the June 30th XLE, the energy ETF, June 30, $74 calls, up 186%. So you can see how we try to go into this thing and it's all about making money. And sometimes it's just a couple of days, as you can see. Sometimes it's several days. Sometimes it's within a day. Swing trades, day trading, and I do less of the day trading, intraday trade, where a lot of people in the in the chat room do it, but I talk about it constantly all the time. Hey, here's a good entry point for today. Here's a good exit point. Be careful. If we break above this, it's going to break out. If you're short, you want to cover. If we break below this level, it's going to go lower. Let's get short, or let's cover our long position, or get out of our long positions, etc. So we're talking about that all day long. Now, and again, on the macro picture, we talk a lot about those things. And again, the Maley report, which is something I write every day, is my daily piece, separate away from the chat room. It's the MaleyReport.com. But that's where I talk about some of the reasoning behind my macro falls, so you understand why we're doing something. But the educational process doesn't end there. We're talking about that in the chat room all the time. Now, I know Rodrigo will want me to talk about this anyway, so I'll go ahead and bring it up now. We did today. I did it a little bit earlier than I usually do. But in the chat room, we also do a Zoom call every day, just like this. It doesn't go as long, but we go about, well, today we went about 45 minutes. But it was something where we say, hey, we're going to go in once a week and talk about the markets in a Zoom call. And we'll do it 15, 20 minutes and work out great. Well, it's turned into something that's been more like 45 minutes to an hour. Today it was 45 minutes because I had to get to this presentation I was making for some college students. But we did it a little bit earlier, but we don't want to miss it. That's the thing. This is an important one each week. But again, we talk about what's going on in the marketplace. But not just that. Why are we doing things? What is so different? And people would talk about, why would you say this? I mean, somebody asked just the other day, why, if interest rates are going higher, why are you negative on the banks? And I said, well, because interest rates usually are good for the stock market. I'm sorry, for the banking stocks. But that's only because usually when interest rates are rising, the yield curve is steepening, because that's really where they make their money. So we try to go into the educational aspect of it. And so, and again, what I said at the time, it's like, they make a spread. Banks, they loan out at the long rate, right? They loan out, they give you, an auto loan, a mortgage loan, a small business loan, a large business loan. That's, you borrow it for 5 years or 10 years or 30 years on a mortgage. Okay, that's where you loan it out. That's where you're making your money. Those people are paying you. You loan that money out, they pay you. And then, of course, you have depositors, and you pay them at the short-term rates. And so they make that spread, that net interest margin. And if the wider that is on a steep yield curve, when long-term rates are high and short-term rates are low, they make a nice spread. But if that thing starts to sit, they make less of a spread. Right now, the yield curve is inverted, right? The 2 years is yielding more than the 10-year. So they're actually losing money on that spread. Now, their real short-term interest rates are still lower. So they're not losing, but they're making less money. So that's my point, is that there's all these different rules. And so I try to explain, we spend a lot of time in these Zoom calls and in the chat room to explain some of these rules that don't necessarily make sense, intuitively, but also somewhere where, yes, the market usually does this, but there are other times where it does just the opposite. And I'll give you another example of that, just on the educational side of things. The stock market tends to follow the bond market. When interest rates are going up, that's not good. You got to pay more for your loans, so that's tough for the economy. You got to pay more if you want to leverage your bets. You got to pay more on your margin debt. It's usually negative, right? So higher interest rates are negative, and as interest rates go down, that's positive. It makes things cheaper, right? Okay, what does the bond market do? So the bond market, when it has total inverse relation to price. When price goes up, yield goes down. Okay, so what usually happens, let me forget about that for a second, but just say, so if interest rates are going up, that's negative. Say interest rates are going down, which they've been doing for most of the last 40 years. That's bullish for the stock market, right? The cost of money is lower, so that means the stock prices go up. And so the stock market looks at interest rates and say, interest rates are going down, okay, we're going to go up. Interest rates are starting to go back up, okay, we'll go down. Now, again, if they can bounce around a little bit here and there for a day, but what's the overall trend? If interest rates, the overall trend is going down, that's bullish for the stock market. If the overall trend is going up like it is now, that's bearish. The stock market's going down. However, there are times when you want to go in and actually when things get really dicey, like they seem to be getting right now, the bond market looks at the stock market. The thing completely flips-flops. And you sit there and you say, oh my gosh, the market's really going to hell in a handbasket. Instead of selling treasuries, and which would force yields to go up, I'm going to go buy treasuries because they're backed by the full faith and credit of the United States government. I'm worried about my stock portfolio going to zero. I'm going to sell my stocks. I'm going to buy treasuries because at least I know I'll get my money back. And so in that case, a situation where interest rates go down and stocks they go down together. Doesn't happen very often, but we could be seeing that right now. And we'll talk about, while we're talking about this and how we make money here in the chat room is what we're focusing on. But then I'm going to move, and the second part of this, tell you about what I see going on in the market right now, what I see in the next couple of weeks, the next couple of months, give you an idea of what we'll be looking at. But the point is, there's these nuances that not a lot of other people, whether they know about them or not, but when you're talking with people in a chat room where you're not trading alone anymore, and you can ask that question. One of our absolute rules is there's no such thing as a stupid question. And you could be the smartest person in the world, but if there's certain things you just didn't know, it's just like, well, it's a stupid question. Well, it's not a stupid question. You're a brilliant person. You've just never been told that. I mean, it's like somebody coming in, from wherever, and they've never seen a football. They might be the biggest sports nut in the world, but they've never seen American football. They come and they go, I don't know what the hell's going on. And they've got to learn. It takes them a little while. Doesn't mean they're stupid. So ask the questions. And again, a lot of these things, it's like, hey, if everybody's bullish, that means the stock market's going up. That's true if a lot of people are bullish. The market, people will buy. But then when it gets to an extreme, when people get really bullish, that's negative because there's nobody left to buy. And there are too many people on one side of the boat. So even if the long-term forecast looks good, the markets, or maybe it's an individual stock, maybe it's a group, or maybe it's a market, it's got to have to come down for a while. We take advantage of these things that nobody's missing. It's my quote, should be on my tombstone. People on the TV constantly saying, the market is always right. That's baloney, okay? The market is only always right eventually. I mean, that's how we make money. That's when the market gets out of whack with its underlying fundamentals. That's how Warren Buffett became a billionaire. He is actually a market timer. He's just a very long-term market timer. When the market he uses timing, but with valuations, things get really, really cheap and nobody else is willing to buy and everybody's fearful and everybody's selling. And he comes in and says, I'm willing to buy this. I mean, Goldman Sachs, one of the greatest firms in the world, one of the greatest companies in the world, they paid for 10 years, they paid a 10% coupon on a convertible bond, all right, to Warren Buffett because they were in trouble. I say trouble, but they were in trouble during, like everybody, all the other banks, during the financial crisis. Warren Buffett was smart enough to know they're not going to go out of business. They're going to be saved if things got really bad. They'll be saved. And he got it. And then when interest rates were zero, he's still collecting 10% a year, no risk. Not to mention that the value of the bonds rose dramatically. So that's what we're looking to do. You have these opportunities, and what we're looking for here and now, is the situation where we're trying to make money. Raising cash so we have the money, but make money so that we have the confidence when the market finally becomes cheap, when it finally gets washed out and the people are selling at the exact wrong time, we're going to be the ones buying. We're going to be trading, but we're also going to be buying those once in a lifetime opportunity, or say once in a lifetime, but those opportunities only come up 3 or 4 times. It came up in 2003. It came up in 2020 at the lows in March 2020. Came in 2009 at those lows when people were selling, or if they're not only were if they weren't selling right at the bottom, they finally got a bounce of like 5 or 10%, and they're like, oh, okay, it's finally seen a bounce. I'm selling. Well, the market kept going up. We're not going to be selling when the market finally bottoms goes up. We're going to be buying all the way up. And again, that's a more educational thing, is how to work that and play it because this whole trading opportunity that we're going through now, and I think will last in the next year, is going to flip at some point and become a bullish opportunity. And all these people are going to be selling and we're going to be buying because we have the money and the confidence to do so.
What I do like, Matt, here, I mean, following you here for 2 years now, I know that you're always on time, on schedule with all your members. You always let them know, hey, I believe we have a correction in place, lighten up with stocks. We're going to possibly buy some stocks at a better price or make money on the way down. And that is just amazing, having that cue, like directing traffic, especially for people that are new driving, if you want to use that example. But I'm getting a lot of questions here about the live room, Matt. Let me just go over them really quick, and then we'll get back to the session because I have some questions for you as well that we're going to dive into so that you can folks get a sense really of what we do in the chat room. Donald, 1 second, we'll get on it now. So again, thanks a lot for these questions, folks. I really appreciate it. We're going to go through as many as we can here. And these are from the viewers. So are the sessions, okay, yeah, and I don't know if Matt mentioned this, maybe he just touched it really quickly. But it looks like this person has probably already been here before. The sessions on Tuesdays are recorded. Yes, they're always recorded. Matt has a session from 11:30 to 12:30. We did touch on that a little bit. So yes, all of you guys, Inner Circle members, have access to those recordings and the live sessions. Next question from Phil. Does everybody that joined get a laptop? Yes, we are doing a giveaway till midnight. Okay, you have to make sure that you join while we are live so that you get pretty much everything, right? Or before midnight. Let's see, what is the chat room schedule? That's Monday to Friday, 9 to 5 p.m. I've seen Matt there earlier before if we do have a CPI or PPI print. But it's pretty much a community. You're going to see that. This is not just like any other chat room there. There's a great community. I know like 95% of the people I've signed up there. They're amazing folks. They love to learn, to make money. And it's been out there for a while. So, all right, next question here. Is there a money back guarantee? Yes, we do have a 30-day money back guarantee till midnight. You have to do it here till midnight. Again, all this stuff is till midnight. Price at renewal, it's the same as today, 70% off. We'll throw the link in the chat. Let's see, next question. Does Matt provide education? Yes, he does provide education about the overall markets, why he's making those trades, and he gives you the real stuff. It's not like, these other networks out there. Okay, all right. So I think we covered most of the questions there. Really, just want to expand a little bit on that, Matt. The value that you provide here, considering, in this day and age, everywhere you go, mainstream media has the spin on the news. I mean, everybody knows this, right? So it's really hard to trust the media, and especially when you're trading around these sort of things, you do want things to pretty much be laid out as they are, not just for any other reason. So can you explain for the folks here why you are different from all the other folks out there that are typically on the TV, and why that is, why they could trust you more than they like by facts?
Well, again, there's a lot of really good people out there, and the journalists out there they're asking the right questions for the most part. But some of the the people who work there aren't, they're there to give their opinion. Others are journalists who are just asking questions. But then you have these people from a lot of other firms. Now, not all of them are like this, but many of them are paid to be bullish. They're constantly saying, they were saying the whole first part of the year, oh, don't worry about interest rates. They're going higher, but it's going to be okay. And I'm saying, no. What happened to don't fight the Fed? I was pounding the table. Don't fight the Fed. But now suddenly you want to fight the Fed. Well, they've gotten their heads handed to them. But that's their job. Their job is to present I've told this story before, but when I was one time approached to maybe join a firm, a very, very large firm, and they said, well, your job really isn't to be a strategist. It's to be it's to really, make sure people, when things are tough, give people reasons why to stay in the marketplace. And I'm like, well, what happens if I think the market's going to go down for a while? And they're like, well, yeah, but we know the long term, the market always does better. And I'm okay, fine. That's not as well. Needless to say, that was my phone interview. I never went for a live interview after that one. But that's kind of what they do. And there was another person who a customer of ours told me, he said he was a major bulge bracket firm, and he's like, when you're doing the institutional thing, it pays to be bullish and wrong than bearish and right. It's better for your career. And that's not what I'm here for. I'm here for trying to tell you what's right and what's wrong. I'm not a perma bear by any stretch of imagination. I mean, I was bullish on the energy stocks through the first half of the year. Those stocks did great. We made real good money in the options and in the individual names. But these other people, again, a lot of these people are on here now. Of course, now when the market's so down, they're finally they look like complete fools. But if they don't at least acknowledge that there's issues going on. But all the stuff that I've been talking about all year, talking about recession, basically inevitable, earnings are going to have to come down, stock market's going to go down. All this stuff I was talking about in the first quarter of this year, or no later than the second quarter, early second quarter. And right now they're all talking about it now. Well, what good was that? Why didn't it come out 25% ago or 35% ago when it comes to the NASDAQ? And so I guess but like I said, I'm not just, some people are like, I'm always bearish. And, this one person once said bearishness sells. Well, yeah, maybe that sells in certain newsletters or whatever. I don't know, but it's like sure as hell doesn't sell on CNBC, and it doesn't sell if you work at a bulge bracket firm. Now there are some examples out there. Mike Wilson at Morgan Stanley, he's been great. So I'm not going to throw everybody into that category. He's been honest, and he's been, not that the other guys aren't honest. They're just they're pressured. I mean, it's like somebody who works at you work at a Toyota dealership. Your job is to sell Toyotas. Your job isn't to sell Porsches. The Porsche might be a better car, but you're selling a Toyota. That's what you're supposed to do, and that's what these guys do. And it's not just brokerage firms. It's money management firms. They do the same thing. And again, it's not unethical because they are correct on a very long-term basis. Stocks do go up, and that's true. And we don't want you to panic out of stocks. But I try to give you that, especially when it comes to the active part of the trading. We want to do it from both sides. And like I said earlier, we have the tools to take advantage of it.
And really quick here, I just want to give a special shout out here. A good friend that I talked to on the phone. He's a member of the chat room, Ricky Carbonaro. He's in the room here with us. Ricky is saying, I just joined during the town hall. Since then, my knowledge increased dramatically. Never traded options before in life. Didn't know anything, right? With Matt's info, I made $2,000 this week, and I only had 2,900 in my account. I started 1 month, with 500. Now I'm up 100% richer just with the info I learned, not even with the money I earned. Folks, you're hearing it from the actual people that are in the chat room.
Yeah, and it's, and of course, this is a great time to we'll pull up for now. This again, I've showed you some ones we made 400%, 200%, 160%. A lot of we've had some real huge ones too. And here's one that doesn't happen very often, but maybe once a year. We had another one last year just like it. But again, I told you about we look where all the opportunities are. It's not just in the individual in individual stocks. We like individual stocks. We like the stock market. But we made, as I showed, we made money in the commodities market, wheat. We made money in the bond market with the TLT. We made money in the in certain groups. And I also showed, I didn't show, but we made money in the HYG, which is a high yield ETF. This is one where the overseas markets, the FXI, which is the large cap ETF for China's stock market. And here was something that, and again, we'll do a little bit of the thing where we talk about education. We look at technical analysis. The RSI is something I look at a lot, and it's called the Relative Strength Index. And it's people have heard me do this before, but I just want to make sure we go through it. When this thing gets to above 70, that red line's there for a reason, because it says stop buying. It's getting overbought. Okay, and you can see here sometimes it gets way overbought. Okay, and here for this, and then of course when it gets green, when it gets down to 30, that is green. Go ahead and buy. It's getting oversold. That's why the green line is there. Okay, sometimes it gets below that line. What you can see here is what happened in China in 2021. All these, and I was bearish on China all the way down. And they just every single month they came in. The Chinese government came in and slammed another group. In the end in 2020, the first one they got was Jack Ma at Alibaba. But they, every month we went into the 2021, they started going after everybody else, and it was education stocks, gaming stocks, you name it. They just named a different industry each year. I'm sorry, obviously the real estate stocks. Each month it seemed like another one. But then finally late in the year, it got worse. And the US came in here, I'm sorry, beginning of this year, the US came in and said, we might delist some of these stocks. And the market went from, lower highs to lower lows, lower high, lower low, lower high, lower low, all the way down. And then boom, it just cracked. And that's because we, as the US, the SEC came out and said, we're going to delist some of these stocks. So we're thinking about delisting some of these stocks. By the way, where it says last week's chart, or disregard that last week's chart, there's something I drew up in March of last year. But see how this thing got cracked, okay? And look at this stock. Do you see how oversold it got? Got oversold there, rallied. Got oversold here, rallied. Got oversold here, rallied. Look how oversold it got here. As I said, the most oversold reading ever. Okay, down to 14. I said, this is ridiculous. Number one, it's oversold. Number two, China is losing face because not only they engineered this, that's fine. But we caused that, the US, and that made them look bad, really bad. To save face, I knew they'd done something. It's just my 40 years of experience. I knew they were going to do something to support their market. And if that meant just going by and telling people, you can't sell stocks anymore, whatever. They would come in, use money, buy the market. I knew was ridiculously oversold and that the government would come in and support their market. So I said, let's go in and let's buy some calls. Well, sure enough, the next day, the market rallied 27%. Imagine the S&P rallying 27% in one day. That's what happened. Huge, huge rally. It went from oversold on that RSI chart, took off. And what we had done, we had gone in, okay, on the 15th and bought the FXI March 18th, $30 calls. See that? Almost 3,000%. And we bought them at 3 o'clock in the afternoon on the 15th. Now usually, like we saw earlier, there's a couple of times where the market was up over, the option was up over 100%. And I was like, hey, let's not get greedy here. 100%, let's just get out. Well, here's a situation where I knew I'm not going to get greedy yet because I know the Chinese market is going to buy this. This is not a meme stock that might bounce in a big way. This was the Chinese. I knew the Chinese government would come in and keep buying it. So we hung on to it till about 11 o'clock. Then it got up so much. I'm like, oh my gosh, we're up 3,000% or almost 3,000%. I know it's going higher, but we got to take something off the table. So we took some shits. Again, it is risk management. Okay, that's another thing we try to talk about in the chat room. Risk management. We made 3,000%, and I said, let's sell half and hold on to the other half. We held on to the other half to the end of the day, sold that for almost 8,000%. So it's over 5,000% combined, half and half. There were people who stuck with it, and because I said in the chat room, hey, this could still go higher. Let's go higher. I think the Chinese said, but I'm not gonna. I'm looking at 8,000% in one day. We can't get too greedy here. Well, some people did. They're up over 10,000%. One person said he made over 14,000%, which was absolutely, if you looked at what happened the next couple of days, the option did go up that much. So if you owned it that long, you definitely did make that money. Now, again, this is not something we get every week, every month, but we had a similar thing in Viacom in 2020. The chat room wasn't open then, so we did it in our tier 3 elite call, but it was Viacom. It was one of those meme stocks that got ridiculously overbought. Same thing, the RSI. We bought puts. The stock dropped 60% the next day, and we made 5,000%. It was the same type of thing. We sold half up about 2,500%, and the other half up about 5,000%. So we made over 3,000%. And again, these opportunities, these huge ones don't come up all the time, but you don't have to just say, oh, I found this diamond in the rough. This tiny little company's trading for 75 cents and it's going to $100. Let's buy. No, these are major markets. These are major important stocks where we come in and we can make these bets in the options market because we don't have to. In the old days, you had to go, if you wanted to buy something now, you thought that the market's going to crash tomorrow because all the stuff that's going on in the marketplace, I want to buy it. Well, you would have to buy December options. Okay, on pretty much anything, whether it be individual stocks or but definitely on the index options. Okay, if you have to go out 2.5 months, you know how much that's going to cost time value? That they're going to put a huge time premium in that. But now it's like, no, I think this is going to happen. I think this is really going to happen within the next week or two, or I may think it's going to happen by Friday. You just have to go out several days. That makes it so much cheaper to buy those options. And yet, if you do get the big move, you still get the huge moves. That's how we've been able to get these 100% gains. Now, again, it's a risky market. There's been definitely plenty of stock times where we've lost money on our options. But overall, we've been up big this year, and these and I showed you much earlier. We made these kind of calls way back in calls. These kind of plays we bought puts and calls back in January. I'm sorry, in October, November, December of last year. This is not just because the market's been going down. We did it when the market was going up at the very end of last year. So the point is that. We got a lot of different things going. We want to be able to play at both sides. Like I showed earlier on the XLE, we made it on the bullish side. We made it in the calls, then in the puts. Actually, made the puts first, then the calls. Then made it in the puts again later on.
Right.
So these things are going, and there's a lot. I mean, I'm sorry, Rodrigo. Go ahead, buddy.
Yeah, just somebody asking here really quick. Where can they find the trades? You're putting entries, exits. It's not like, oh, I like this today. Like you're straight up putting in timestamp. Right. Because you already do this, right? Like for those that don't know, you provide research to institutions on your market analysis. So I think it's a steal for all these people, retail traders, to actually pick your brain and trade with you, right? When there's actually institutions like, hand over fist paying millions of dollars just to hear you talk. So I think it's great that you guys as retail traders have somebody like Matt that you can ask questions about anything in the markets, absolutely anything. It's a big issue where new traders, they'll see some little stock guru kid or something on YouTube or anywhere out there, right? But Matt's not Matt. Matt is like the actual like OG guy you want, trading stocks since like the 80s. Like this is his stuff. Trading legends. You're right, Donald. He is somebody should write a book about Matt one day in the chat room.
Yeah, I don't know about that. Well, all I can say is that there are some people. I mean, and I've said this before. Absolute truth, and it happened to me again last week, Rodrigo. On Friday, I did not write my morning comment in the Maley report, and I got the call from Ruth, who is Carl Icahn's secretary and executive assistant, and said, "Where's your comment today?" He reads it every morning. And I have talked to him personally. The first time I ever talked, I said, I saw you. He just called me and said, well, his assistant called me and they got on the phone and he said, I see you on Bloomberg on TV. I like what you say. What's going on? What do you see? And that's how we developed it. I talked to him for 45 minutes, he and his son, and we've had a relationship ever since. And like I said, he reads it every day. So you can't make stuff like that up. If I did, believe me, I'm sure he would find out about it. So, I don't know if he really cared, but the point is, this has happened to me several times when I don't forget to write it. I just write a note every day for the MaleyReport.com, and he didn't have when he doesn't get it because I'm doing something, but he wants to know what I'm saying. And this is where it's just a morning comment. You guys get it all day long in the chat room, and we're talking about, look at ARC Innovation Fund. We got a lot of stuff still to talk about.
I'm pretty sure he's catching up here on the webinar here. So big shout out to Mr. Carr.
Probably right there, right?
So yeah, man. All right. So we have a lot to unpack, man. Like, what are the top three things on your head right now? Bank of England, rates, Fed, like reversing. Is it that bad? Like, where is your head right now?
Yeah, I mean, let's see what time is it. Okay, good. It's after 6 because we get a better feel, but it's still early. When you're looking at the futures. Let's see where they're trading right now. Actually, they're up a little bit, so that's good. I don't know if you can see that right here. This is whoops. Let me get this out of the way. I don't know if that may be only on, there's something blocking it on my screen. I don't know if that's only on my screen or your screen, but you see here the Dow futures, they're actually up 30. The S&P futures are up 7, and the NASDAQ futures up a little bit too, which not a huge surprise given the market is down several days in a row. And I think, we have this, we have a PPI number, which is the producer price index that comes out tomorrow morning, and people will certainly react to that, or at least, but the CPI number is coming on Thursday. And of course, that's the consumer price index number, big inflation number, very important inflation number. If it's much worse than expected, it means the Fed going to keep tightening. That's going to be a big problem for the market. And if it's much better than expected, you could finally get a relief rally. So it's going to be a big day. So I guess my point is that I'd be surprised if the stock market sold off a lot more tomorrow. I think tomorrow will probably be, we'll bounce. The problem is, it'll probably end the day kind of unchanged, but that doesn't mean it can't see wild moves. But again, in front of that CPI number. Now, however, having said that, excuse me, I'm just going to get this. I've been charging up this thing, so make sure it was charged up. So I think we're all set now. But anyway, so what Rodrigo asked, this whole thing with Europe, with the Bank of England. I'm sorry, the Bank of England. It's a little strange. Number one, it's like, why would they come out and say this publicly? Why wouldn't they just go behind the scenes and say, hey, listen, guys, if those who didn't hear, the Bank of England today, the market was trying to rally back a little bit, relief rally. The Bank of England came out about 8 o'clock at night, their time, and in the afternoon, mid-afternoon, our time, and said, hey, pension funds, we're only, they've been supporting, you probably heard, they've been supporting both their currency and their bond market through purchases. And they're like, hey, we're not going to do this forever. They came out and said, you've got 3 days, you got to the end of this week to shore up your pension funds, to shore up your leverage and to make sure you're out, unwound some of these trades, because we're not going to support this thing forever. And all of a sudden the market went boom, because so many people are used to, wait a minute, what happened to the Fed put, or the BE Bank of England put, or the ECB put? Everybody, and they basically came out and said, we don't have that anymore. This is the same. This is very, so you see, the weird thing is, like, why would they say that publicly? Are they trying to panic the market? I think what they were really trying to do was just like say, hey, cut the crap. we're not going to give you this liquidity forever. You've got to take care of this right now. It's kind of what the Fed did this summer. Okay. Remember the market rallied, everybody thought they were going to pivot, and they said, no, we're not going to pivot. And they hammered it home until the market finally went down, because they're like saying the market is in la la land, thinking that we're just going to, we're just going to, whenever you guys think we should, we're going to pivot. No, we're fighting inflation. You get that through your head. The market needs to be lower. And I think they continue to think that way. And now people are starting to say, well, geez, something's going to break, therefore it's going to be bullish. And I'm like, yeah, this is something I've actually been saying all year. I said they will keep, a lot of people are saying they'll tighten until it breaks, but I'm saying and some people were saying in May, that's a reason to be bullish. I'm saying, what are you, out of your mind? I mean, when something breaks, the market will be a lot lower. Okay, that's not a reason to be bullish. That's a reason to be bearish. I said that in May and June, July, and I've been saying it more recently. And the same thing, if something does break, it will be forced selling. Leverage will have to be unwound, and people, what will they sell? Well, they'll sell Apple Computer, things like that. The market will have to go down. So if something breaks, we will get a big bounce, because the Fed will have to pivot. The problem is that they will have to pivot from much lower level than we're standing right now. There's a reason Jamie Dimon said the market could go down another 20% this week.
Right. So let me ask you, are you concerned at all about the largeness of the debt that we have on the federal government, on an individual basis, on a government debt, commercial debt, personal debt, business debt? It seems like this could be the biggest bubble because it's all on debt, right? So are you concerned at all, the budget, 31 trillion, like it doesn't look like it's going to stop there. So how far can we take this?
The one thing that's kind of funny is that I've been hearing this for 40 years, that the budget, that we're spending, our deficit's too big and our debt is too much, and it's going to blow up. Well, and it still hasn't, 40 years later. But at some point, you just can't keep doing it, number one. But number two, people can say, well, actually, you can. The government can just keep printing money until some point it becomes worthless and the whole thing implodes, and that may be way down the road. But that's okay. You could even if you take that tact, which I don't follow, but if you do, it's still, corporations can't do that forever. They're loaded to the gills with debt. We have over about $11 trillion of corporate debt out there. 11 trillion. Okay, and total global debt is over $20 trillion. Okay, you cannot, especially as interest rates are moving up, you cannot service that debt. It's too big. So yes, it is a big problem. Individual debt. People saying, I remember this summer, people kept trying to say, oh, the consumer is still in great shape. I'm like, what are you talking about? Yes, they were in great shape last winter because they were willing to spend, but they went on their credit cards to do it. Okay. And so I knew this was coming. I knew this slowdown in the consumer was coming. Yep. But these perma bulls, because they're paid to be bullish, wanted to tell us that well, there's a reason. It was the only way they were able to keep up was that they started buying on credit cards. Credit card debt went to a new high. That we've seen that in the last couple of months. People, right. And they can't continue to do that because the cost of putting food on the table and the cost of filling up their gas tank and heating their homes has gone through the roof. They came back down a little bit and now going back up. 64% of the people in this country live paycheck to paycheck. If they're spending a lot more on food and energy, they're spending less on everything else. That hurts the economy.
Right.
So that's what I believe.
Yeah, and the one thing I really, kind of get a sense of is that people on the main networks, it feels like they're out of touch with reality. When they see high credit card usage, they think that's great for the economy. People are spending. Like, yeah. Dude, they're using their credit card because they can't buy it with cash. They have to borrow. So exactly. It's just this is really why I do appreciate the breakdown on your end, Matt, because yeah. It's they have a purpose, they have an agenda, right? And as retail traders, we have to take care of ourselves, each other.
Right. And it's like there was a person came out this year and it was in the summer. They're saying, oh, the consumer is still spending plenty of money. They're spending the same amount of money. They're just spending it on other things. So don't worry. I'm like, where did what planet did this person come from? It's right on CNBC. And I'm like going, of course again, the job market's still fine. So people haven't lost their jobs. So yes, they are still spending the same amount of money, but they're spending way more to fill their gas tank and heat their home or air condition their home in certain areas of the country, and put the food on the table. I mean, it's way up. And again, if they live in paycheck to paycheck and they're paying a lot more on that, who the hell cares if they're spending them out? The fact that they're spending it differently means that they're not going out to dinner. They're not spending it at the amusement park, wherever it might be. The thing that helps it, they're spending it at the grocery store. That doesn't help the grocery store because it costs them just as much. Okay, yes, you're spending more money at the grocery store, but the grocery store isn't making a bigger profit because their costs are higher. So that's not helping the economy, because a small part of the economy is making more in revenues. In total sales, but they're not making any more profits. And everybody else is revenues are going down and profits are going down. That is not good. And it just
right.
Somebody would say that on TV. I just sit there and go, how can an intelligent person say that? But they did.
I even heard that they expect earnings to stay flat with even if we are in a recession, or so I don't know how that would work. Where
it's never happened.
Yeah,
it hasn't happened. I mean, I shouldn't say never. I've only gone back to studying back to the Great Depression or World War II. Every recession since then, the earnings have gone down. Period. Okay, there's no exception. So if right now we're looking at earnings are probably be lower for this year than people are looking for. So if they're going to be lower this year, and then because they're having lower than expected, they'll be up. Don't get me wrong, they'll be up, but they'll be lower than people have been saying. So they've been saying $228. Now it's down to about $223. If it comes at $215, which is still higher than last year, which was $208, that's a very small gain. If next year has to be lower, then we're looking at $200 for the combined S&P 500 companies. $200, that means the stock market's not trading at 15 or 16 times earnings. It's trading at 19 or 20 times earnings. And the stock market, without zero interest rates and massive liquidity, the market can't trade at that level. So I don't want to get over, I'm really kind of pounding on the table bearish here, because I was very bearish early in the year. We've already obviously come down a lot. I think we'll fall further, but there will be, as there have been this summer and we saw last week, sharp bear market rallies. Some of them will last, I don't think any more will last 2 months like the one over the summer did, but we could see that some that lasts for several weeks. We saw, how many of them? There was like 6 or 7 of them, or maybe more during the .com crash. These bounces, so we want to stay nimble in this. We're not going to sit there and go, okay, let's just buy a gazillion puts that expire in March and just go play golf or go to the movies or eat bonbons. No, because we're going to see some wild moves. But so no bear market, especially, it's funny, bull markets can sometimes go kind of in a straight line. That's what happened in 2021. But bear markets have big bumps and big pops, and that's what we want to take advantage of. And right now, it could happen at any time. If we get a real good number out of that CPI number on Thursday morning before the market opens, and we get kind of resolution, things calm down in Great Britain, you could see a sharp rally. So we want to be positioned for that. And that's when and believe me, tomorrow in the chat room, we're going to be talking about straddles and mostly strangles. I've got some bearish positions on, and other people do, and some people have some bullish positions for the reasons I'm telling you, because it could happen anytime. But we're going to be talking about that, because when you have a strangle on, you can at least hedge part of your position, number one, or when we put a strangle or a straddle. A straddle is when you buy the option of both a put and a call with the same expiration date and the same strike price on the same stock, and then you just expect a big move in one that will more than make up for anything you lose in the other one. Okay, a strangle is the same thing, but with different strike prices. When we tend to do it, we've been doing it skewed one way or the other. It's like, so in other words, I'm very bearish, so I bought a few calls. And the calls, all they really did was cushion my losses because I was more bearish. But more importantly, I scooted to that side thinking all I really want to do is kind of at least I can at least get out flat if the market goes the other way I think it's going to go. This time we'll have to see. We may go pretty even on tomorrow evening, but tomorrow afternoon. But again, my point is that we play those games, and that's it's a good strategy. You want to go in. Who knows what the hell the CPI number is going to be? You want to be all in on one side without any kind of hedge, any kind of protection. That's what we talk about. So that if you're wrong, at least you won't lose your shirt. Now, of course, they won't go to zero the next day, but you want to be able. You'll sell them at a loss, but you'll make it up with the gain you had in the other option, whether it be the put or the call. So I kind of went through that quickly, but for those who are new to it, but again, you can buy, you know, again, you go in, she's, I've got a big profit in these puts. So I'm going to buy a few calls just for the overnight, just in case the market moves against me. And then I can say, and I'll make a little profit here, and I'll have a little bit of loss. So I've got a big profit on my way up here, and it may go down to here. My profit is a little bit lower. I bought these calls, and that at least will help me. And then if this thing goes to zero, I've had some ones where the hedge, boom, went to almost zero, worthless. Who cares? I made 200% more on the other side of it. And so you can do that. You don't do that in a stock as much, because it's like, why would you short a stock in one account and buy the same amount in the other account? Without options, you're just gonna you're gonna lose just as much in one as the other. Everything's gonna even out. You're gonna come out flat. But in options, I mean, the thing is, yeah, sure, they can go down 50% on the call, but the put goes up 400%. You know, you don't have to be a math major to know how that works out. That works out well. So because of that leverage in the market in the options, it can work really well. But we also do other things. We don't just concentrate on in the options. We do ETFs and leveraged ETFs where you don't get that sharp movement. It doesn't go to zero. I mean, when you don't have an expiration date, so they can go on for a while. Those leveraged ETFs can work out really well. However, you do need to be careful, because leveraged ETFs do lose time. If the market goes sideways, leveraged ETF will go down. Both a bull and a bear, the ETF, because they use options. I don't want to get too far into the weeds with that one. But the point is that you can see that that we're talking about not just options, other ways to take advantage of it in a leveraged way. And we also talk about individual names. You know, one of the big ones I keep talking about right now is Google or Alphabet. It's like the stock has only been cheaper. Now, if the market goes down more, and we'll go down a straight line, we'll see sharp bounces along the way. And if something changes, I'll change. Believe me, if that facts change, I'll change. I just don't see that changing yet. But Google, it's only been this cheap, or it's only been cheaper two other times, 2009 and 2011, 2012, which is kind of, so you could say three times, but it was really at the same time. One was, of course, the great financial crisis. The other was the European crisis that happened a couple of years later. Remember when Greece was going to go bankrupt and default on their bonds, et cetera. Well, a lot of stocks you think are really cheap now, they're not. They've come down a lot and they're a lot cheaper, but they're not cheap. Google is one of those stocks. And it could get even cheaper and get down to those real bad levels that they saw at those two times. But it's like, why? I'm not going to try to buy it. I'm going to try to grab the absolute bottom. Well, I'm going to buy a little now. I'm going to buy a little next month, and the month after that, I'm going to buy it in between now and this time next year. I'm going to have a nice average price, and 3 years from now, I'm going to look real good in my position.
Hey, Matt, really quick, I just want to give a big shout out to our newest member here, Jamie Neto 298. Welcome to the family, brother. Let's go.
Great to have you here, and boy, we'll have a lot to do later this week. I tell you, tomorrow. And I say, when you get on and say, geez, Matt, you got 15 trades for me? No. Tomorrow, again, the day before that CPI number, unless something big happens, Bank of England or some blow up takes place, some hedge fund blows up, we'll probably kind of sit in our hands the first part of the day. But believe me, as the after day moves on, we want to set up for that CPI number that comes out before the opening on Thursday. We'll be doing a lot. And then, of course, we got the bank earnings on Friday. We have a lot to do over the next, I say again, tomorrow morning, maybe not so much if nothing changes overnight. But boy, by midday or mid-afternoon tomorrow through the end of the week, we're going to have lots to do, because you have earnings season coming. That's individual stocks. And again, sometimes it's just a guess. You have a stock that's not oversold. They haven't made any pre-announcement. It's not oversold. It's not overbought. Then it's just a guess. I'm not real big on just guesses. But you can go into another stock and say, it's really kind of sit there right in the middle. It's not overbought. It's not oversold. Nothing really newsy out on it. But guess what? They've beaten estimates every single time in the last 10 quarters. Okay, well, maybe we should buy some calls in that one. But other situations, we sit there and you go, hey, a stock's ridiculously oversold. They're about to announce earnings. Even if they announce bad ones, unless they're absolutely horrendous, the stock is going to either, if it's in line, the stock's going to bounce in a relief rally. If they're better than expected, it's going to charge in a big way. And even if it's a bad number, unless it's a disaster, you might get a buy the news. They say sell the rumor, buy the news, a reaction. So we go in and we go ahead and buy some calls in that place. So these are the plays that we get. And again, we have these things called lottery tickets, where you're spending not a lot of money. I mean, I never spend 10%, or I should say never, rarely spend more than 10% of my trading portfolio on any one given trade. Going in there and saying, I'm going to take a guess on if Apple Computer is going to beat earnings tomorrow, and I'm going to bet I'm going to bet the farm. Unless you got inside information, if you have that, you're in big trouble. But why would you do that? No, there's no reason to do that. You can make, in the options market, you can make plenty of money. But what we do with these lottery tickets is we go in like a regular lottery ticket. You don't expect to win, and so you don't spend a lot of money. But if it does win, you win big. And we go in there and we buy stocks, buy an option that right before, that has just a couple of days, maybe 2 days or 1 or 2 days till expiration. And if it really hits, you get something, it can really give you a big home run where you get those 300, 400, 1,000% returns. But even if you don't, even if you get 50 or 60%, I mean, in a day, that's great. So again, we're the whole idea, nobody bats 1,000 in this market. You bat 300 in the Major League Baseball, you're going to get paid a boatload of money. You're going to want to do a lot better than that in our market. We want to make it batting 600, 700%. On it. So we want to, if we're only right on 3 out of our 10 picks, we have big problems. We only 6 or 7 of our picks. We are going to have losers. We are. Anybody who says he hasn't had a losing trade is lying through their teeth. You talk to all the great portfolio managers, they will tell you they've had whoppers. We try to avoid the whoppers, but there's some, again, if you buy, again, there's some who've lost 100%, but it's been such a small trade, I don't really care. It's like I bought it for a small hedge. I spent very little money on it. Now it's worth $10. I might as well let it ride for a couple more days. Maybe I'll get lucky. If not, what's $10? I'm only using it for a hedge anyway. I don't really care. So I lost 100% on a very small bet, but I made 200% or 300% on a big trade. Well, obviously you make way, more than makes up for it. And so in other words, you want to be batting 600, but you want your 600 or 700 or 800, and then but your winners are up a zillion, and your losers are so small. Again, you want to cut the big ones in quickly. And then if the other ones, you lose 80% or 100%, well, it's such a small trade, I don't really care anyway, not a big deal. But, there's all sorts of other things we can talk about here. It's a couple of things I just want to talk about in general. Earnings. We're headed for a recession. Jamie Dimon is the most important businessman in the world, running bank, and he can see everything. He sees what his mortgage department, how many loans they're putting out, how many small business loans they're putting out, where the losses are, et cetera. And he's calling for a recession, says the stock market he didn't say could fall another 20%. I think he's right. But here's a guy that in 2016, when the market was on its back and people were still worried about the banking system, and he came in and he bought $26 million of his own stock, of his own money. This is not a company buyback, his own money. The stock and the market bottomed that day and rallied straight up, or almost straight up, for 18 months. Okay. What happened this spring when the market was down 15%? And he came out and said, and he didn't say he's buying his own stock. Instead, he said, batten down the hatches, a hurricane's coming. This week, he took it to another degree, saying, things are going to get worse. And it could be quite painful. And it could be as much as 20% more to the downside. So when smart people talk, on the one side, when things were good, he said, you guys are way too nervous. We're fine. I'm going to put my own money, big money in the stock, into the stock. Instead of buying stock, he's warning people about battening down the hatches. So that's a concern. But look what we've had recently. We've had Apple Computer. All these stories going out that they've cut back on their production because their demand for their iPhones are down. The new iPhones, right? They got Ford, GM getting downgraded because of demand. They're talking about demand problems. And one company, UBS, saying that Ford's going to lose 50% of revenues, going to be down 50%. Advanced Micro Devices, talking about chip stocks being down. Sorry if I'm repeating myself for those who were on the Zoom call today, but are you trying to tell me, they said, well, it was all because of PC demand. You trying to tell me the Advanced Micro Devices was down 50% from expectations on their sales because of PC demand? I'm sorry, but you said that in 2005, people would understand it. PCs are important, but they're nowhere near as big as they were 15, 20 years ago, number one. Number two, it's well, number two, you look at what's happened with Federal Express. Federal Express is saying that we're going into the most important selling season of the year, and they've already warned twice over the summer. They come out a third time saying, "Hey, our ground revenues volumes are going to be way down." That's what they see. The people, and it ain't because of PC demand. People buy PCs in the store for the most part. But even if they don't, what do you know what PC shipments are as a percentage of their total volume in Federal Express? It's fractions of a percent. Okay, they're seeing it across the board. That means that it means we're headed for a recession. Federal Express gives 3 warnings in 3 months. They get 2 warnings in about a 1 month period. Then another month and a half later, they give another one. That is, we're headed for a recession. That's a problem because the stock market is still expensive. Like I talked about earlier, it's probably, as those earnings come down, it's probably trading at more like 19, 20 times earnings, not 15, 16 times earnings. And the market always overshoots to the downside. That means we have more work to do on the down. We may rally up 4,000 again or 4,200 again on the way, but we're going to be heading down. And active traders are going to be able to take advantage of that. So again, when you get a guy like Jamie Dimon saying things like that, it's a problem. And the Fed, they've been pretty adamant that things are going to be tough. And I'm sorry, things are going to, and that they don't care. Basically, they're saying, we know there's going to be a recession, but it's what we need to do to tame inflation, because if we don't, the recession is going to be even worse. It's people are pissed at the Fed, but they certainly deserve a bunch of blame. But the inflation they caused by keeping the liquidity spigots open for too long was exacerbated by the Russian invasion of Ukraine. Inflation wouldn't be anywhere near as bad. They wouldn't have to be as aggressive. How could they have known that was going to happen? There's plenty of blame to go around. But the problem is they don't get any credit for. A lot of people made a boatload of money in 2020 and 2021 because of their ridiculously amount of liquidity. And everybody's saying, well, you can't take that liquidity away. I want my cake and eat it too. You can't have that. That's bad for the market. The Fed had to take, the market was always going to go down somewhat because they couldn't keep the liquidity. If we had never had any inflation, they were going to slow down. They were going to have to raise interest rates because they were abnormally low. They were below their natural level. And the amount of liquidity into the marketplace was giving the market steroids. It couldn't last that long. It had to come back down. So, and that was going to cause the market to come in. Now, because the inflation is high, and then that's been exacerbated by the war in Ukraine, it's even worse. So my point is that we're going to have some opportunities to buy at some point. If things get really ugly fast, that great opportunity to buy may not come next year. I've been thinking it probably comes some point next year, maybe even in March. Who knows? We'll have to see how things play out. It may come quicker because things could really crack, but I just don't see it bottoming in these levels.
Right, Matt. And for those somebody's asking me if this is your first time trading through a recession or a market, what other types of situations have you found yourself similar, or I guess saying panicky?
Well, I'm a 5-year veteran. They say 5 years, but think about how if I was in my 6th year, starting my 6th year, or about to start my 6th year in the business when in the crash of 1987. So I was trading, and I saw what happened there. Again, I wasn't a wily veteran, but I wasn't just a newbie. I wasn't just sitting there watching, getting people coffee. I was trading, and so I saw that. I saw the bear market in the early 1990s. Of course, the big .com crash, bubble crash that took place from 2000 to 2003, the great financial crisis in 2009. We saw the bear market in 2000, almost bear market in 2018. And there's been, all sorts of these different movements. And I'll give you an example here. One of the things that I'm going to tell you about, we made, I probably won't be able to find it on there, but I should have looked it up in advance. But here's an example of what I took just from my experience. Okay. When the cryptocurrency market crashed this year it really got hit hard in May. It was already crashing, but in May, people were getting big liquidations. People were getting margin calls. They had to sell. The problem was that there was not enough liquidity in the cryptocurrency market. They couldn't meet their redemptions, but they had to raise the money. So what did they do? There just weren't any bids. So they had to go to the stuff they did own that was liquid to raise that money. And one of them was Apple Computer. And I kept saying to myself, why is Apple getting hit? The market's going down, crypto's crap. It's like, but Apple doesn't have any negative news out. But okay, well, stocks move. All stocks are volatile. Apple can go down like any other for no particular reason sometimes. But then it kept going down and down. It's like sometimes down 10%, in just over a week. And I was like, it dawned on me. That's what Apple is as a source of cash, because I've seen it in the past. I've seen in other bear markets where forced selling, people couldn't find the liquidity in that particular market. I've seen it with long-term capital management in the late 90s. I saw it in the great financial crisis. People were like, I can't sell what I own because it's this obscure, well, maybe it's an obscure bond, or in this case, a cryptocurrency. I've got to sell what I can. And so, and I knew to myself, well, what would you own if you own Bitcoin? You sure as heck don't own General Motors. You own Apple. And sure enough, the cryptocurrency market finally stabilized for a day. Apple kept going down and then finally stabilized. And I said, this is it. There's nothing wrong. There's nothing new out on Apple that's negative. This stock is a source of cash. It's going to bounce back. At the end of that day, we bought the Apple call options in May. And the next day, midday, we sold them for over, I think it was 480%. It was over 400% gain. But these are the types of things where I've seen in the past, because I've been there. And, it'll be 40 years literally in 6 weeks. We'll mark my 40th anniversary in the business. And so I say I've seen all the market cycles. Things are changing. I say I've seen it all, so I'll never see something new. I see something new every day. I learn something new every day in the chat room. But I love, giving up. I love to teach. I love doing that. And so again, been there, done that. And so at least I have some sort of a clue. And while this summer, when people are saying, oh, it's all over, all these bears, oh, they're all a bunch of morons. And I said, nope, I kept pounding. And boy, there's a couple of times I said, geez, maybe I am wrong. But all my experience and all my work told me it wasn't. And sure enough, it rolled back over. And see, we are now. We've made new lows. And it's a tough market, but it's an exciting market. We've profited very, very nicely. I think the only thing I just want to say here, and we've been going for a while, so I do want to take some questions and stuff. But the two things, just remember that we had added a huge amount of leverage into the marketplace in the last 12 years, and especially in the last year and a half. As that gets unwound, it just takes a while. It takes time to unwind. If you unwind it all at once, the system breaks. It completely implodes. And some guy on TV the other day saying, a lot of leverage has been wound out of the market, so we don't have to worry. I'm like, yes, a lot of leverage is out, but there's still more margin debt. I mean, that's a good measure of leverage in the market. There's more margin debt than there was at the top in 2007. Forget about what it was at the bottom. So we have a lot more leverage to unwind. So that's one thing. But the other thing is, of course, is ARK. And, people, Kathy was a very, very smart person. And, but one of the things is that she really felt, this is the ARK, and this is the fund, of course, made a new low here. It's funny because it's actually been in a sideways range, but it's testing the lows. You can see back in May, this sideways range. But the one thing is that in my opinion, she just didn't realize that these innovative, we had a bubble in innovation stocks. People were just buying and think they go up forever. And now that we don't have any liquidity, nor are we likely to get that kind of liquidity again, these are still good companies, but they weren't good stocks at the beginning of this year, and they're not, and a lot of them are not cheap at all. They're a lot cheaper than they used to be, but they're not cheap at all. The one thing somebody asked me today, will blow up of the ARK fund, cause a flush in the market? Anything's possible, but she would have to get massive redemptions all at once, because that would force her to sell. And the reason why I say that is that unlike some hedge funds or banks or brokerage firms that you hear about every once in a while, Archegos, remember they blew up, they do not use leverage. So she's not going to get the forced selling in the options market or wherever, where it's going to be a big problem. If she decides to close her doors and liquidate, she won't have to do it all at once. She decided, this policy isn't working. I've decided I'm going to close the fund, and it's going to close at the end of the year. I'm going to take 3 months, 6 months to unwind it, and I'll return money to investors. And, so that wouldn't happen. And and this could be an unbelievable buying at some point, an unbelievable buying opportunity if she stays with it. Again, it's not a hedge fund, so she's not making. Some people, they have the high water mark. If the higher water mark goes down, they just say, "Hell, it's not worth it." They get out. She won't do that. So I think she'll stay with it for a long time, and it will present a great buying opportunity. I just don't think it'll have the same kind of huge returns we have in 2020 and 2021 because we won't have the same kind of leverage in the system. If the Fed embarks on some kind of massive QE program like they did again, yeah, I'd get bullish again, but it would be negative on a longer term basis because you can only take a bubble so far. We can't. What Rodrigo asked earlier, the amount of debt in the system, we cannot go to the same kind of bubble that we had in 2000 because once it bursts, the system won't be able to hold it because there's just too much debt out there. Right. Anyway, we can talk really a lot about different things here. But
what are your thoughts overall on the just OPEC situation, the energy situation overall, especially for Europe, and what we can see here for U.S. energy stocks?
Yeah, I think at the very end of last week, I was saying, I turned more bullish on the group. I said, let's not chase them here because they had a huge run over a very short period of time. So the XLE, which is the energy stock ETF. So you can see when it got up here, I said, let's get these lines out of there. You see, it wasn't really wildly overbought on the RSI chart that we talked about, but it was getting overbought. And just look at that huge move. It was up 20 some odd % in just 2 weeks. So I said, I don't want to be chasing it up here. Let's back off. Now it did bounce a little bit late in the day, and we're going to be looking at that in the next couple of days to get back into these, whether it be individual names, stocks I like Chevron, Devon Energy, or the old Apache, which is APA Corp, Oxy, et cetera, or just the XLE or XOP, which is the oil and gas ETF. But again, these options are very, very liquid. I showed you earlier how we made some nice money on those this year. But on a fundamental side of things, the OPEC has put their foot in the ground. They said, hey, listen, we don't want oil below $80, and we just, there's more to it than just OPEC. I mean, because we just haven't spent the money on infrastructure to be able to extract fossil fuels out of the ground. We all want to go to clean energy, but it just can't happen. The economy can't live off that. It's going to take 2 decades for us to get that far. And even if I'm wrong, it's 1 decade. So these stocks are still going to do well. And I think now with them putting their, basically putting the flag in the ground saying, we don't want to go any further. Now, that $2 million production cut that they talked about last week is only 900,000 when you take out the people who cheat in OPEC. But that's still a huge change. The strategic oil reserves are going to end soon, and we're going into the winter months. So this is something that we will be adding to, and I think we're going to we've already made a lot of money in the energy stocks this year. We're going to make a lot more. Now, however, look at some other stocks. So what about natural gas? Okay, hold on. I've been talking about natural gas. I think, there's only so much time. We can send all the liquefied natural gas to Europe we want, but there's only so much. Okay, if we can get it over there, we got to take it from somewhere else. So we're not going to have this thing where the prices, if we get enough to Europe, the price is going to go down. No, we get enough to Europe, price is going to stay elevated because we're going to be taking it from someplace else, and maybe even the U.S. But look at this purple line here. This is another chart for natural gas. You can see the purple line. That's the 200-day moving average. And look how it's gotten over the last year. Every time it has dipped below it, just like it has now, but every time it's kind of bounced back. And here it bounced back big time, okay? Now we're heading into the winter months. I think it's going to bounce again soon. So on a fundamental side, so on the fundamental things, we know what's going on in Europe. I think it's, again, a war of attrition. It's not going to end soon. Those oil supplies and natural gas supplies are going to be a problem. And so natural gas prices, I believe, will bounce on a fundamental basis. On a technical basis, I like it because it's, you see how it's testing that key support level, 200-day moving average. And you can see from this, it's coming off an oversold level. And let's just see weekly. It's probably not overly crazy on the weekly, but whoops. Okay, it's not too bad. It's kind of neutral on the weekly. But on the daily, it's oversold. And so this is something where I think we'll be able to benefit. So we'll look at some of the stocks like LNG, look at Cheniere Corporation, although I like some of the others, is even though that's the best company in the group, there's also a Kinder Morgan and EQT Corp are stocks that I think could act very, very, very well. So yeah, I'm gonna remain bullish on the energy sector until I see something change. If something just changed, we'll change our stance. But this is a group that I've been active on, traded around it very, very nicely. But I've been bullish for 2 years now. Basically 2 years ago, when everybody else said I was absolutely nuts to be turned bullish on this group, I did. But there's been not just that time in June, but a couple other times where I said it's getting ahead of itself. And even just this past week, I said getting ahead of itself. I didn't say sell or buy any puts. I just said let's back off from buying. You can't just grab every single opportunity. You just got to say, maybe it just takes a breather because it was up 20% in 2 weeks. Maybe just trade sideways for a little while to work off that overbought, and then it goes higher. So I didn't want to make a negative bet, and we're still going to hold off another couple of days, see how it goes. But this is a group I like overall. Anyway, we've been doing this for a while here, for an hour and a half. So maybe we can just look at maybe a couple of picks here. Or a couple of tickers that people want to look at, and then we'll wrap things up. But I do think it's a really exciting time in the markets. It's been a painful time for a lot of people. It's been a profitable one for us. We've had some rough patches where we didn't make, we haven't made money every week, but we've made a lot more weeks than we've lost money. And overall, we've done extremely well. And I'm looking forward to hopefully making more money in the year, because this is, there's people, and they look at me and say, what's your overall? I went to almost 100% cash in my long-term account at the beginning of the year. And they ask me what it's not nobody's business how much I've done this year, but I was like, I just say is like, I went almost 100% cash, so I've had a good year. And then the day trading. But again, that the smaller portfolio is way up, but the bigger portfolio is just cash. So when I say up over 300%, that's on the smaller trading portfolio, not on the overall portfolio. But still, it's been very profitable, and I haven't lost any money in that big portfolio. I literally only won one stock at the beginning of the year.
Right. Yeah. So let's go ahead. So we have a couple tickers here. We just went over energy. Brendan, let's go with Tesla now.
Tesla. Okay. Oh my gosh. What a stock. It just, oops. I don't know what the heck that guy was doing when this whole Twitter thing, but he is okay. Now look how oversold the stock is getting. Now, okay, let's step back a second and say there's these outlying things. What's going to happen with Twitter? The Twitter bid, is he going to try to back off? It was interesting though. Tony Saginaw, believe me, I give credit to. I listen to a lot of smart people. Anybody who thinks he's got all the answers is a moron. All right, I listen to Tony Saginaw, who's a analyst at Bernstein, and a very, very good, very highly respected guy. And he is the head of their entire technology research area at Bernstein. And his comments this week, which really made me sit up and notice, was he talked about how demand for their cars in China is dropping dramatically. And I think it was I don't want to get the quote, the stats wrong, but it was like 6-month wait for a car. Now it's 1 to 4 weeks in China. It's like, whoa, what the demand is just falling off a cliff. And that's an important market for them. They put a lot of money into that. Nobody's talking about them going out of business like they were, 2 years ago. But I guess my point is, so I think said 170. I was saying to the people in the chat room, when would you buy it? I said, let's see it get below 200. I'm sorry, let's see it get below 210 and get down near this, May, June low, because whenever a stock gets oversold and is testing a support level, you usually sees at least a short-term bounce. Just the opposite on the other. If it's testing a key resistance level and it's oversold, it's overbought, it usually pulls back a little bit before it goes to break out. So if it is going to 170, like Tony Saginaw thinks, I think it'll bounce soon, because see how oversold it's getting? You see how it's more oversold than it was there before it bounced? All these bounces here, it's more oversold than that. So it's getting soon. I would be surprised if it got much below 210. So we're getting to a level where I think we can buy this for a trade. Longer term, he's got some issues to go over. And if the overall market comes down in the recession, this stock will come down. But, again, this whole thing is just like setting up. Does it take another 6 months? Does it take another year? Who knows? But it's going to be another one of those unbelievable buying opportunities that you only get 3 or 4 times in a lifetime in a lot of different stocks. And this will be one in Tesla too. But right now, I guess my point is near term, I was real concerned about it when it broke down here. But now that it's getting close to that support level, that, again, that those lows, whenever, the old lows that a low from several months ago, that tends to be, you see how it came down and held it there. So it's kind of a key support level getting oversold. So I'm looking for an opportunity sometime in the near future to go along the stock. And even in the options market, especially because now the stock's trading at 200, the options are a lot cheaper than they were when the stock was trading at 2,000.
Right. Then we have Meta, Facebook.
Meta, yeah, okay, here we go. Meta, oh boy, this one, it was funny because I really kind of thought that they seemed to be having, they were throwing they threw out the kitchen back in here when they reported their earnings. They threw out they threw everything in the kitchen sink at it to really say, hey, we got this really bad stuff. Let's get all this bad news. We might as well get it all out there, and that's usually a good strategy to take. And so I said, stay away from it. The thing is, boy, you see this thing now. I mean, these goggles they want you to buy for $1,500 that'll probably be obsolete in 2 years. Zuckerberg is done very, very well. He lost his, obviously his business partner, she really turned that. She was the adult in the room. She's no longer there. What does this mean? The stock's oversold. It could be due for a bounce anytime soon. But when I was thinking back in here that this is a stock that could be, it's going to be a good one to buy. Eventually, maybe it will be. But boy, I talk to my kids and they're like, who uses Facebook anymore? And I just don't see this metaverse thing being something that takes off soon. Spend $1,500 on a pair of goggles that people are going to be wearing glasses to do that stuff in a couple of years. They're going to look like idiots walking around with those big goggles. I just don't. People. There's still people can play video games and do lots of things without it. So I'm not a big believer here. That said, near term, you can see it's oversold on its daily RSI chart. We don't just look at RSI; we look at Bollinger Bands charts, whatever. And it's oversold here. So the stock is the problem. It's been dead money all year. I don't see it. Big money will be a trading opportunity at some point soon, probably. But this is just there's too many other ones that I like better, like Google and some other names where the opportunities are better. That I'm just going to kind of stay away from it until I see something that's something really compelling and changing. This newest development really got me concerned.
Right. I mean, it kind of feels like these guys called the top when they started doing all this imaginary world. Like, hey, what do you need real friends? You can have fake friends on the internet, buying selling houses for like millions of dollars in the metaverse. It just sounds like, I mean, who would do that? Who would put their money up for that? Who knows?
Yeah, I mean, maybe someday, but that day is too far out for the future for me to be paying for it in a stock now, especially when some other stocks are look more intriguing.
Yeah, it just kind of goes hand in hand by whatever was happening there. Like NFTs, all those things are like $0 now. Right. So, but yeah, all right, that's very interesting. Let's see. Do you want to go through a couple more here, Matt, or any?
Yeah, we do one or two more, and then we'll wrap it up. That'd be good.
Okay, all right. So just to let you guys know what's going down. Okay, we're gonna go through one or two more stocks here. Matt is gonna give us closing market remarks and what to expect tomorrow in the live room. And then from there, I'll be staying here showing you guys the live room. I'll give you a sneak peek of some of the trades that we've been doing and all that stuff. And if you have questions on joining, we'll do that as well. So let's see. Giovanni has an interesting one here. Gold.
Yeah. Gold, boy, this one is funny because I've stayed away from it. And a couple of times I said, oh, it looks enticing, maybe. But excuse me. So this is just, I'll do the GLD, but I'm just gonna do the commodity right now. Whoops, what happened? Oops, GLD. So I'm just gonna do the commodity first. And then I'll go over to the GLD, which is the ETF. But you can see here, what we're looking for here, is, see this? Oh, let me adjust it up for you a little bit. You can see it's kind of neutral in its RSI chart. But look at this. What we need to see, we kind of have a well-defined level here. It's, see the 50-day moving average. See how it got, well, let me get rid of the 200. The 200-day is the purple line. Let's get rid of that. Cool. But see how it got right up to that line. Okay, it was used to be support. Got down to it, bounced, got down to it, bounced. Old support, one of the rules in technical analysis, old support becomes new resistance. Got right up to it, failed. Got right up to it, got slightly above it, failed. That's the thing. Whenever you break a support or resistance level, you always want to make sure it's a solid break. Not if it's just a slight break. No, you need real confirmation up 2 or 3% above it. Again, got to it, right to it there, pulled back, right to it there, pulled back, very slightly above it, pulled back. It just cannot seem to get above that 50-day moving average. So all those algorithms and stuff are looking at that and they're like, okay, I'm going to sell every time it gets there. Now, having said that, we also have a series. Here we got it made a lower high, lower low, lower high, lower low, lower high, lower low, lower high. What do we have here? Do we get a lower low again after testing the 50-day? Or can we bounce and finally give ourselves a higher low? That would be kind of the setup. Then if you get a break above the 50-day moving average, so in other words, if it looks like we're heading back higher, you can start to nibble on it. And then if you break above the 50-day moving average, then you add to it. Okay, you don't have to buy the thing all at once. In fact, I suggest that you don't, because it's really hard to know that in a volatile market like this. Okay, boom, I'm going to put that there. Oop, there we go. Okay, now see that, that made it look higher than it was. Hold on, let me move it, change it so it looks better. There we go. Okay, but see how this, if it breaks above, this is the commodity now, if it breaks above 1736, or basically 1740, you get above 1740, and we do that sometime in the next couple of weeks, that'll mean that it made a higher low and a higher high. So we have, above its 50-day moving average, which has been rock solid resistance for several months. So you get, and then of course it would take, not drawn here, but the trend line would also break above its trend line from the March highs. This thing is going to skyrocket if it finally breaks above 1740. And we can adjust that price as time goes on. Maybe it'll be, again, if it continues to make lower highs and lower lows, then we'll have to adjust again. But right now, I'm thinking I'll buy. If it turns back up and gets to about 1700, I'm going to buy it. It gets above the 50-day moving average, I'm going to add to it, and I'm going to use my average price, okay, as my stop out level. So if I buy some at 1690, and I buy more at 1710, my average is going to be 1700. That'll be my stop. If it goes back below that, I get out. No loss, no nothing. But if it keeps going higher and breaks above that old high and finally gives us a higher high, I'm going to add even more. Then maybe my average price is 1710, 1720, and off it goes. And again, I raised that stop out level. So it's trying to set up, but I've said that a couple of times. You got to break above that 50-day moving average.
Right, Matt. Let me ask you something really quick, if you can kind of help me understand here. A couple of users have messaged me about the stock. It's and just to get your overall thought, it's a penny stock basically. It's a ADMP, but what they're mentioning here is that they did a couple days ago. They pretty much they partnered with Raymond James to sell part of their company, and they have I only looked at one of them, Zimchi. It's like an opioid. It's a commercial ready, like opioid or whatever, however you say it.
What's the symbol again?
Treatment, ADMP.
AD is in David?
ADMP, correct. And they're just mentioning it moved like 70% today with no news, but the last news on the 4th of October was that they were seeking a sale of those sides of the business, the opioid treatment. And do you think this could be people buying in, people inside the company, or?
Yeah, the one thing here, I just don't know the stock, so I can't. And if I don't, and I'll be honest, I mean, there's sometimes people ask me, and I just say I just don't know, and I don't know the stock at all. So I really, it would be irresponsible for me to comment on. I don't know the stock, and I don't know the situation. So I'm sorry, but I just when I don't know something, I'll be very honest with you and just say I just don't know, and that's that.
Yeah, I've never heard I've never heard about it either.
So
I've just been getting a couple of messages, but there's a lot of retail folks out here that trade stocks as well, not just options, right? So I mean, Matt is
absolutely
able to help you guys with stocks and that sort of stuff, not just options.
right. Well, that's great. Yes, exactly. I mean, we definitely want to talk about different stocks. And if I don't know, like this one, I just admit. And if I do, when I do, and then I would look at the chart. Sometimes if I don't know very well, I can at least look at the chart, look at it technically. But this one, I just don't know. So I'm afraid I'm going to have to pass on that one.
Right,
But
no worries, man. No, yeah, I mean, we get a lot of requests here and things like that. All right, Matt. So did you want to do one more or closing
no, so
market
well, we'll just
remarks?
wrap it up here. I just got to.
All right.
But it's just we're at an exciting time in the marketplace. It's a painful time for some, but it's been a really exciting time for those in the chat room. We've done very, very well this year. It's a time when you don't want to be trading alone. If you're active trading, it's just hard to trade alone. And I think that it's I don't have all the answers by any stretch of the imagination, but again, one of the big things is I really try to be also a teacher, so you know why we're making the decisions I'm making, and why I'm avoiding doing things that why we're doing it. And it's you get these stock picks, and it's like great, that's a great thing, but why? Why do you like it? And especially for trading. You need more than just a story. That may sound great. That's going to be a great seller in 10 years from now. This might be the next, Amazon or whatever, or even 5 years from now or 3 years from now. But right now, it's not that. What's going to happen now? And there's a lot of different things involved, and it's not just fundamentals. It's a lot of technical analysis and a lot of sentiment readings and such, where you can really get a good idea of what is going to happen rather than what should happen. And it's a time where most people are going to have a tough time. More importantly, when the turn does come, they're not going to have the money or just as important, or maybe more important, not have the confidence to go ahead and step to the plate and buy these stocks. You're not going to get the exact bottom. To say I bought on when XYZ hit its absolute bottom tick and it went up 300% over the next year or two. That's not what we're looking for, but you want to be the one who's buying somewhere near the bottom and adding to it on the way up when everybody else is finally saying, oh my gosh, I finally got a bounce, I need to get out. And the market money flowed out of mutual funds for the 3 years after the 2009 lows. All those people were selling on strength. The people we want to be, when that happens, we're going to be buying in that time, not selling. And because we're going to have the confidence and the money to do so. So it's exciting, but it's tough. But again, it's not just me, a lot of people, really intelligent people, all trying to help each other. Very, very helpful people. And we have a lot of fun too. We kind of rib each other every once in a while. It's a community, and I hope you'll consider it because it's really worked out for a lot of people. And we have the tools now that we didn't have. Let's take advantage of them. I'm tired. I think we're all tired of the big hedge fund guys being the only ones doing well when in these kind of situations. Let's take advantage of it as well. So thanks a lot for joining us here today. I hope you'll join us in the chat room. For those who have joined, congratulations. And we'll see you again tomorrow morning. We probably won't do a whole lot, but we'll be doing plenty before the week's over and we'll be doing before the day's over. So good luck with everything. And thanks a lot, Rodrigo. And fourth quarter is just getting started. We're gonna have a rip-roaring one. Let's take advantage of it.
Hey, Matt Maley, let's go. All right, man. Thanks a lot for everything you do here for the retail community and, more importantly, for the chat members all day there. So I'll see you tomorrow in the chat room.
Sounds great. Thanks, Rodrigo.
All right. There you go, folks. That's Matt Maley, Chief Market Strategist at Miller Tabak and lead trader at the Stock Picks Inner Circle chat room. What you're seeing right now is the live room. This is where the trades are posted. Okay. This is where you'll find the entries. For all you guys that join, make sure that you go to this channel, right? There's two. There's the Inner Circle chat. This is where everybody's posting, right? All the members, Matt Maley, back and forth. Communication is right there. Then you have Matt's important messages. That's the other channel here. And there, only Matt can post. And you can see his entries, exits. I mean, this is really... Remember, guys, I told you I took a trade from Matt on SQQQ, basically. Well, I mean, so on the puts, basically, right? So right here. So here he says, yes, I'm going to do the same. I'm taking profits on my October 7th, $22.50 puts. They're up 200%. So these are the kind of trades like that he's looking for by doing these short-term options, right? So he's going to give you the entry, the exit, so that you can pretty much buy it right there. Exactly when he does it. And you can see there's timestamps there, so you know exactly when it will be posted. So let's go over some of the stuff here really quick so that you guys know what to do. For all you folks that did join, yes, in your email, check your email. So everybody that did join, remember to fill out the form. You have to put out the address that you want the laptop to be shipped to, right? So once you sign up, there's a free laptop for you waiting. You just need to fill out the form. If you don't find it in your inbox, it's in your junk or junk or mail. I'm sorry, junk or trash, one of those two. It's going to be there or your inbox. So I'm going to throw the links here. What's up, Zane? How we doing? But yeah, I mean, Matt Maley's chat room is solid. As you can see, the trades, that's pretty much what he goes for, right? In the spam sometimes. Rick, 1 second. 1 second, Rick. I'll get in touch with you, Rick, to hook you up there with the lifetime. Mick, yes, like I can do something for you, Mick. Just do something here. I just sent you a message there on the Zoom. Just make sure to reply there. You too, Rick. Yeah, reach out, Mick. Let me put the contact there. 1 second. What you can do is just that. All right, here's what we'll do. Okay, Rick, I just sent you a quick message here. So just do the annual, we'll take care of the rest there. All right, folks. So yes, there is a 30-day money back guarantee for those that are asking. Let me just go through this really quick. 30 days, pretty much. You try it all day, Monday to Friday, 9 to 5. There's a meeting on Tuesdays, and that meeting is from 11:30 to 12:30, right? So it's about 45 minutes, an hour. It's pretty much Matt Maley going through the entire market, going through trades, things like that, what's happening, all that sort of stuff. So all the inner circle members have access to that. It's every Tuesday. And also make sure for the laptop. So I'm going to put in the contact, Matt, that's going to be Eastern. That's Eastern time. But a couple of you folks here are saying like, hey, if I'm new, does this work? Yes, it does work. I mean, this is the most simple. This is the most simple type of trade in options that you could make. So this is not a butterfly, a condor, a spread. This is buying a call or buying a put. Yes, that's correct, Mick. So you buy a call and then to close it, you sell it, right? Same thing for the put. You buy the put, you sell it to close, and it's pretty simple, right? If all you have to do is follow Matt's trades, it becomes less complicated because you don't have to deal with the headache of trying to figure out what's happening in this market, right? In the middle of a recession, of rate hikes, a lot of things happening at once. It's definitely not the time to wing it. That's for sure. It's definitely not the time to wing it. It's not the time to try to figure it out because there is something called market tuition, if you haven't heard of it. And, that could be unlimited, right? You could end up paying the market a lot, right, for that tuition. So it's really important to really get with a community, get with a group, especially, a group that is led by someone like Matt, a real professional. Yes, Rick, that's correct. Matt Maley's a professional options trader. It doesn't get more pro than that. 40 years. Like you cannot ask anybody above 40 years is already retired. I'll tell you that. Or right there, getting close to. And Matt Maley is just getting started. He's got another 20, 30 years in him. He'll still have the chat room. I've already had this conversation with him. Like this is long-term, folks. Matt Maley loves the markets. He's very passionate, as you can see. He cares a lot about all his chat members, things like that. So I've been following him for about 2 years here, so I can tell you he always lets everybody know about like what could happen. You know, if he sees a correction, then lighten up on the stocks, maybe go bigger on the cash. So he's always pretty much trying to take care of his members, is what I mean. So all right, 1 second, folks. Big shout out here, Sizzly, J X42. Big shout out here. Welcome to the chat room. Let's go. Let's go. Have to give a big welcome. All right, Sizzly, just make sure that you fill out that email. You just got an email as soon as you sign up. It's automated and it's going to say something like laptop delivery. Just make sure that you fill it out. It has all the information there. Well, just the form where you can fill out the address that you want the laptop to get shipped to, right? Make sure that you're in the chat room in the morning because Matt will be giving a morning commentary, as he always does, about the markets, expectations, what to look for, trades that he's entering, getting out of, risk management, a lot of that. And just remember, you have him the entire day, like where you can talk to him, ask questions, just like everybody else here is, right? Um, let's just go through some of this stuff so you can see. I mean, some pretty interesting stuff. All right. So I don't know who did that last mile. I know who that is though. What's up, man? Let's see. Trading zone, value play, a regular in the chat room. We got David V. He's a real OG. He's been there for a long time. Big shout out to David. A lot of the members here, they enjoy I mean, it's a workplace really, if you think about it, but you know, a lot of people here help out new folks out there. So don't feel like you're coming into a big sea of traders. You know, like everybody here is really helpful, amazing. There's a great feeling of just working together. Mick, no, you don't need pro to register with this. All right. Let's see. So these are pretty much the regulars there that you're going to see in the chat room. We got James Donahue. What's up, dude? This guy is active. He's in several spots here. But he's very active here in the chat room here with Matt. So you can see, right? Everybody's talking. Everybody's going through the day, sharing trades, education, setups, things like that. So okay, all right, 1 second, Rick. Let me just check for you. If anybody does have issues with the checkout, somebody just messaged me that they had issues with the checkout. Just try to refresh it. I'm gonna stick around here just to kind of help you out if you need me to. But yeah, I'm just gonna basically go through some of these trades and setups from Matt. Big shout out here. We have to give a big shout out here to the new folks here that membered that just joined, new family members. We have our druggist, our DUI gist. What's up, man? Welcome to the family. Let's go. I think that's you, Drick, right? Is that you, Rick? Just make the payment. All right. What's up, Rick? How we do? Rick is in the house. All right. He's in the house. He's officially in the house. Welcome aboard, Rick. Make sure you're there in the morning tomorrow. No excuses. All right. All right, Mick, let me know when you get in there live. I'll take care of the rest. And since you joined live, right, everybody that joins live, they will get bonus trade alerts and bonus strategies from Matt Maley. Yes, just added on, tacked on, if you join live, right? So Rick, welcome here. Make sure you check your email for that, for the thing, you know, like the email to fill out the address for the laptop. All right, so let me just go through what Matt has been doing. All right, so all right, so I'll be selling the QQQ October 14 puts All right, so sold those puts. That was good. I sold my puts today as well. All right, geez, I left half an hour ago. The market was barely down. Took me 30 minutes to get back. Walk into my office, and it has fallen out of bed. I guess the BOE has told pension funds that they have 3 days left to unwind their positions that they can't maintain before the BOE halts its intervention in market. So it's some really interesting analysis here, right? Remember that Matt is a chief market strategist. Like it's not a game. Like he's like really providing deep insight into the markets, and he understands it well, right? A lot of people out there on the news just talk, but this guy actually knows. Matt does know his stuff. He knows his stuff here. Let's see. Just a reminder, today's regular Tuesday Zoom call is at 10 a.m. Okay, so minor update, right? Remember, we have a Tuesday session. I think I mentioned that. So all the chat members will have access. Rick, yeah, just make sure, send me an email, Rick, and I'll walk you. I'll call you after the session. No worries, man. I just want to show you guys really like what the chat room is about, right? Where the trades are, and see if this is something that works out for you, right? You have 30 days. There's no excuse, right? So let's see. He's going to buy a small number of TQQQ October puts. So this was yesterday, right? I mean, we can see right here that this is yesterday, right? This is today. He sold. This is yesterday. So he was buying puts on the TQQQ, which is a triple leverage ETF on the bullish side. So basically, he's buying puts. So if it goes down, the puts make money basically, right? The market going down like in general, right? The Nasdaq specifically. So this is one of the vehicles here that we use. The SQQQ is another one. This is something that really personally helped me in my trading. Instead of just trying to chase stocks, really just trading the markets in general, just going short or long, especially in these times. Like this is the best time to trade that kind of way. And that's volatility, right? It doesn't have a set schedule. It comes when it comes, but it's definitely here. It doesn't look like it's leaving or going anywhere. So you have to take advantage of it. This is what people like mean when they say like, take advantage of the volatility. Like this is exactly what this is. Brando, let me put the link in there for you, man. 1 second. So whenever you hear people saying, yeah, like trade the volatility, take advantage of the volatility, what does that mean? That like this is exactly what it means. You're buying triple leverage ETFs, buying calls or puts, and when you're right big time. Okay, if I'm gonna be right about something, I'd rather be right 100% than 10%. Right? If you're gonna be right, and with options, you can really kind of structure your trade. And many of these calls and puts he's buying, they're short-term expiration. They don't go too far out in time, so they don't cost a lot. It's like $100 a lot if it's like 80 cents or 90 cents or $1 or something like that. What's up? We got Richard Judge in the house. In every session, we have Richard here. Matt Maley is, I mean, you already know Richard, Matt. So good stuff, man. Yeah, we do all this stuff just to, go over all this with Matt. Interesting session. Now you guys can, able to see that. Mick, I put the link there to join so that you can join their live and get the extra bonuses. Randall says, I'm a new person and would like to join the live room. Okay. Use that link in the bottom, Randall. Mick, I'm going to put that email for you. But more importantly, folks, it's really trading in a community. That's going to help you guys a lot more than trying to wing it or figure it out. This is not the time to do that. Maybe in 2020, when everything was going up, it was easy to make money with EV stocks and SPACs and all these things that everybody was trading. But right now, it's the total opposite. It's a very different time. So you want to make sure that you can trade with a group that can take advantage of that, right? So it's not the same. The market changes every day to day. It changes month to month, year to year. So it's really important to be able to pivot and adjust to all these changes in the markets that are happening right now. Like if you get a trade alert, today, tomorrow it could mean nothing, because everything changes. The BOE does something else. So who knows? Some other bank does something else. You don't know, right? We don't know what's going to happen. So really, that's why you want to take advantage of the volatility. Whenever you see you saw the crash in 2020, and you saw like stocks fall so much, and you were like, it would have been good to know how to make money like on the way down, right? So if you're here, if you're in this room, if you're listening to this, you actually have that opportunity in front of you right now, because that is how Matt trades. So not only will you take advantage of it like in a simple way, like just buying shares on the SQQQ or something like that, but you can do it with options, which really kind of takes it. You can do a lot more things. Like those puts that Matt sold were like 200%. Not every day; those trades don't happen every day. But I mean, if you're looking for them, you'll get them, right? So, Samsung, what's going on, man? Let me type here something for you. One sec. Yes, and for any, yeah, you're right, right. Mark, if you do join live, you'll get the additional trade alerts from Matt. That's correct. So yes, more importantly, folks, trading in a group, in a community, don't trade alone. Don't try to wing this stuff. It's not the time to do that. So even if you're new at this, like this is a good kind of like sign for you, maybe like, hey, don't do this alone, because it definitely doesn't help, right? And the other thing, folks, is that you can pick Matt's brain. You can ask him about stocks to buy and hold for a long time, or about your own portfolio. You can ask him about your own trades. You have a chief market strategist pretty much like on demand, Monday to Friday, 9 to 5, unheard of. So if you have questions, folks, we're going to put the contact in the chat. Feel free to reach out. Big shout out to all you folks for being here. Richard Judge, we got Andrew Weiss in the house. What's up, dude? What's going on, dude? Let's see. Samsung, hit me up. Mike, Rick, I'll call you folks after the session. All right, folks, thanks for being here. Have a great day. I had a great time here with Matt Maley. And for those that joined, I would look forward to see you in the chat room tomorrow with Matt. All right, folks, have a great day.
Andrew.